getting back to this market, I know it's been wild. You had 9 days in a row of gains, and then we broke that yesterday and selling today. Let's see what our next guest has to say about this. Glen Smith, Chief Investment Officer, GDS Wealth Management. Glen, thanks for being here. So, how are you feeling? Stock market can make a comeback or what?
We think there's a lot for the investors to digest right now. We've had a very volatile year. And I think one of the reasons it's rebounded so quickly is Trump's and the administration has really toned down the talk on the tariffs, and a lot of solutions look like they're going to come out in the next 30 to 60 days. And the market's rebounded quite nicely because of that.
So you feel like there can be opportunities at times, right? I mean, I guess you have the idea about keeping them for the long haul, but keeping your portfolio for the long haul, not changing too much, but there are presented opportunities at times, right?
Absolutely. I would be very leery of just jumping in and say the S&P 500 or the Dow Jones Index, but there's very little pockets of the market that are way cheaper than the market in general. So I think that's what you want to do. You want to take a bottom-down approach, a more micro-level view, and look at what stocks really make sense in this type of market. Just because the market's rebounded and it's almost back to flat for the year, still parts of it are still elevated.
So when you look at the volatility index right now, we're 2458. That's slightly elevated. It shows there is a fear of volatility, but it's not 30 or 50 or 60 or 80. That being said, Goldman Sachs came out with their recession odds of 45%. There was another survey I looked at today. Recession odds were above 50%. If the recession comes, which could be, I don't know, tell me what you think, and maybe it could be short-lived, I don't know.
Yeah, we may be in a recession, but that's not to say that when it makes sense to be in equities and a long haul. They try to time the market, even at Goldman Sachs. I think they try to say that because of who they are, but you want to be very careful. If you're a long-term investor, you want to be more focused on what positions, what sectors are going to do well for you in the next coming years, regardless of there's a recession. This year, who knows, we may be in the middle of one right now. We still think there's a ton of opportunity. And quite frankly, even if it's announced we are in a recession, that's rear view looking, right? So we could be announced in a few months we're in a recession and the market could be rallying, since the market typically is well in advance of that. So for our investors, we don't really focus on are we about to be in a recession. We focus on where are the opportunities and how do we maximize our investment gains for our clients.
And you were looking at Deckers Outdoors. You think that could be some opportunity, right?
Absolutely.
Why?
So Deckers is one of our favorite stocks right now. What's unique about them is even though they continue to take a ton of market share from Under Armour and Nike, the last 4 or 5 years are still up almost 400%, even though year to date they're down about 40%. Deckers kind of saw the tariffs going to come down the pike years ago into China.
Right.
So they diversified into Indonesia, Vietnam, Cambodia. Now the tariffs did hit all those countries, which is why they came down 40%. But we think once the tariffs are resolved, that this is going to jump back. It's going to snap back really, really hard.
Yeah,
fast.
when you say Nike and taking shares in they have the Hoka brand.
That's right.
The sneakers that everybody loves.
Hoka, Uggs, yes.
Uggs, very popular as well. So those are some of the Deckers names under the umbrella. How about Monolithic Power?
Monolithic Power is another one of our favorite stocks. So when we talk about semiconductors, people love to talk about NVIDIAs or other companies that do GPUs. What makes them unique, especially in the semiconductor space, is they're more focused on being energy efficient for people's vehicles, their kitchen appliances, their phones. So we think this is somewhat more resilient in terms of the economy. If we do go into recession, like we were talking about earlier, it's going to do very well, whereas an NVIDIA might be more hurt in that environment. So we think it's done well. While it does have a major competitor in Texas Instruments, it's slowly taken a little bit of their market share and doing quite well.
I'm seeing $700, $800, and even $900 targets. For example, Truist has $899 as it's $900, right?
Yeah.
It's amazing, some of these price targets. Do you think it can actually get to some of those price targets?
We do. Over the next 2-3 years, we think the earnings are going to continue to go up. Even this year, it's up in this rocket market, and we think the next few years are going to be we're quite bullish on it.
Yeah, pretty amazing. And then there's JP Morgan. Why JP Morgan?
JP Morgan's one of the stocks that's been in our portfolio the longest, run by arguably the best CEO on the planet, Jamie Dimon. It's positioned if interest rates stay elevated, net interest margin should continue to do amazing. If interest rates come down, which I don't think they're going to come down tomorrow, but possibly in Q3 and Q4,
right.
We think mergers and acquisitions should pick up. Lending, whether it's commercial or residential, should pick up. So it's kind of a stalwart stock in a bull or in a hot economy or a softer economy.
And then last but not least, I mean, just a big picture here is we're taking a look at U.S. and the types of stocks. I mean, as you said, you even said Warren Buffett, continues to make money. What is it that there are certain kinds of stocks or investments that definitely you count on?
Well, we love dividend payers, and you talked about U.S. stocks. In general, people love to say, hey, let's focus on international markets because it's cheaper versus the U.S. I've been doing this for 20 years, and for 20 years I've been hearing the same thing. Look at international, yet the U.S. market continues to do very well. What we like to look at are companies that are going to continue to earn, that have a dividend, and that are diversified, have multiple streams of income.
And then I think about all the tech names. I mean, we spent a lot of time talking about Palantir today. AMD is today after the bell. The Mag 7 always in focus. Is tech something that you follow closely, or do you like that group?
Absolutely. AMD is one of the stocks in our portfolio, as is an Apple or an Alphabet who beat their earnings recently. We think Alphabet, for example, is one of our favorite tech stocks. Right. Even what's beautiful about it is even if the advertising erodes a bit on clicking on the Google website, they have other income streams. YouTube keeps growing.
Yeah.
They have part of Waymo, so they have so many income streams. Going back to what we look at, this is a stock that even if certain parts of it erode over the next couple of years, the sky's the limit.
So we're waiting to hear from the Fed tomorrow. Jay Powell, last time he spoke, put some pressure on the markets. He talked about maybe higher inflation and more unemployment and things like that. What do you expect from tomorrow?
I think he's not going to show his cards necessarily what he's going to do later in the year, but I do not expect him to do a rate cut. Inflation is not at what he wants, which is 2%. It's still hovering around 2.5%. I don't think he wants to be pressured or bullied into doing anything he doesn't want to do. So I don't think he's going to do anything now. And maybe that's a good thing. In case the economy does turn south, he's got some dry powder, and he can lower rates to keep the economy pumping along. Yeah,
looking forward to tomorrow for that announcement and then the conversation afterwards. Last but not least, when I think about commodities or Bitcoin, anything there that keeps you interested?
We're not fans of Bitcoin. I'm not going to go as far as Charlie Munger and call it rat poison, but we're not fans of Bitcoin per se or gold. We do like the commodity we like is we always like energy. Just the old-fashioned way. ExxonMobil is a company that it continues to diversify how it gets its energy, not just from out of the ground, by doing it more efficiently and better for the environment. And it's a stock that we think is going to continue to do well as well. And that way you have a little diversification into commodity. That's great. All right. Glen Smith, great to see you. GDS, well, thank you for being here in person from Texas. Thank you. Glen Smith, appreciate it. Chief Investment Officer there.